You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. Welcome back. It is time to commence our broadcast week here on the Options Insider Radio Network. Yes, it is time for the program beloved around the globe as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Of course, you guys have a lot of great content coming at you again this week. Crypto Rundown coming up after this show. Got a great guest joining me to break down the madness in the world of crypto. Shh, don't tell Uncle Mike. Then, of course, throughout the week, great pro Q&A is coming up for all you pro folks, as well as options oddities later this week. Live streams, TWIFO, all sorts of goodness. Dogs and cats living together. Mass hysteria. Another great week here on the network. Of course, if you listen on demand, all we ask is keep rating and reviewing. More folks discovering than ever. I haven't looked for August yet, but for recently, but I'm sure it's on track to even beat July, which was a record month. So we thank all of you. Keep rating and reviewing if you do like what you hear. It clearly does have an effect on all the new folks discovering the content. And of course, if you want to go above and beyond, theoptionsinsider.com/pro is the place to go to learn more. Of course, for you cool cats listening right now, just for you. I'm just talking to you /secret club. Don't tell anybody else. That's just for you. Check it out. You can join us for all the stuff we do throughout the week live. Of course, you can get at all the pro Q&As as well as all the great unusual activity and a whole bunch more. Actually, it's coming up a couple of days now. Hard to believe. August already in the can almost. That means they're going to give away yet another. Man, we're just flying out of here. Another pro trading crate. So get your name in the hat if you have not done so already. Theoptionsinsider.com/pro is the place to go to join the ever-evolving party that is theoptionsinsider.com/pro. Speaking of parties, we got to kick things off on the network with a bang, the way we have done so now for quite some time. You know it, you love it. My compatriots know it and love it. In fact, they are paying close attention because they are now vying for an epic prize, exclusive San Diego Comic-Con vintage, but 6-inch, so blown up, so you can actually look at it. Not like the old 3 3/4 tiny one. Nice, solid 6-inch vintage style Sergeant Slaughter with all the accessories. You want to keep them mint in the box? You're going to open them up, let them breathe, put them on your desk. It's probably what I'm going to do. I'm getting one myself. I don't have to fight for it, but these two do. And in order to fight for it, we shall have to make them guess an 80s wrestler. You know what, listeners, I did mention on the old social medias that I probably was the last person on the planet to go see Maverick in theaters this weekend. Finally saw it yesterday. Literally the last person. It was amazing. It was all the things everyone had said. I was not excited to go see it at all for a long time, but everyone just heaping so much love on it. And I thought that was really fun. I was like, what can we do that would capture that 80s aviation, 80s flying? There's anybody with a flying gimmick or a pilot gimmick? And I went looking through, and alas, there were none. So I thought, you know what? why don't we go instead to the original 80s high flyer himself and bring him back onto the show. So without further ado, can you guess this 80s wrestler? And by the way, I will have to strategically mute a few times during this intro because they do say the person's name. So I will try to be quick on the trigger finger. Let's see how I do. All right, here we go.
For over 50 years, the revolutionary force in sports entertainment.
All right, and you two, whenever you hear it, wherever you feel the urge strikes you, you know what it is. You just say buzz. Nothing yet. Okay.
I can't hear it.
Oh, you can't hear it? Oh, that will make it more challenging. All right, let me see if I can fix that for you. Here we go, listeners. Technical issues. I think our audience heard it too. You know what? All right, yeah, I'm not sure why you're not hearing it.
Buzz.
If I say to you right now, the original 80s high flyer for the 80s, who would you guess?
Superfly Jimmy Snuka.
Yes. Okay, there you go. All right, I thought I gave it to that. You guys don't hear did you hear the intro music?
I didn't hear anything.
No.
You guys have heard no music? Okay, well, that is something we'll have to fix on our end then. But that was, of course, Uncle Mike TOSAW from St. Charles Wealth Management. He is our winner for the week, so he gets the first notice of first guess here, as well as Mr. Greasy Meatball Mark Sebastian. I will work on making sure they can hear the music, listeners, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. Let's go around the horn to first the uncleist of Mike's, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. You could not hear the music, but it was the old Superfly Jimmy Snuka theme himself. So A, if you have any thoughts about him. B, are you like me? Are you one of the last people on the planet? Have you seen Maverick? Do you have any thoughts on that one? Very 80s iconic. It's like they took a movie from 1987 and just dropped it in 2022. And it is suddenly the biggest movie on the planet. So that is pretty hilarious. And then C, if you have time, sir, what is catching your eye in the markets today?
Okay, got it. Well, in terms of Maverick, I saw it the first day. My daughter wants to be a fighter pilot. So we went and saw it as a family. Awesome movie. Loved it. They did a really good job with it. Normally sequels aren't very good. And I did like the original better when I saw it the first time, but this was possibly my all-time favorite sequel movie of all time. They did a really good job with it. In terms of Superfly Jimmy Snuka, can't say that he was really like one of my top people. But the main thing that I remember Jimmy Snuka for was just when Rowdy Piper beat the tar out of him on Piper's Pit that one time. And that's how I remember the Superfly Jimmy Snuka. In terms of the markets today, interesting day today. So we just had a giant toilet flush of a market on Friday with the S&P going down like it did. And then it was not looking good last night in the futures, but we held 4,000. And so the key number has held. The other thing that also appears to have held, at least for now, is the 50-day moving average. So those are the two things from a technical standpoint that appear to be keeping the market up right now. The other interesting thing is that with this market drop, we've had bonds drop as well. I think just on fear of the Fed raising a bunch of interest rates, and we're still kind of in that lower channeling area with which we've been for a while. So that's where we are in the 10-year note area. In the commodity land, at least today, silver is relatively flat. So that's the one with which I follow. Oil is up over 3% on the day. It's at 96 a barrel. It's knocking on the door of 100 again. Natural gas is flat on the day. And let's see, what else? What do I keep forgetting to think? Oh, yeah, I really don't like Bitcoin. And that is what I'm seeing in this market today.
Stay tuned for Uncle Mike, our special guest coming up a little bit later today on the Crypto Rundown. I just realized I got so excited at the start of the show with all this not hearing the music stuff. I neglected to set the table from a market's perspective. Thankfully, Uncle Mike did a pretty good job of laying down where we were coming from at the start of the show. But he's right. We were seeing a tremendous drubbing. We were saying on Friday, if you recall, listeners, on Volatility Views, it's not always the first shock to the system that really spooks the markets. It's the second one. And if we continued selling off today, that might mean a different regime from a vol perspective, might mean a different regime for the overall markets. And we started selling off pretty hard today, and the S&P started threatening that 4,000 level. 4,300 starting to seem like a bit of a distant thing in the rearview mirror, at least for now, listeners. But we'll see if today's trajectory keeps up. We could be back above 4,100 by the end of the day. We'll see. We got down to about 4,020 in the S&P, at least from today's session, and then bounced hard off of that, listeners. We were down, closing in on a full percent, and then just rally ho. Now, pretty much S&P is pretty much unched on the day now, and we have Dow pretty much similar level. NASDAQ was still off about 0.33% when we kicked off the show, but pretty darn close to getting break even as well. So the bulls are back, at least for now, trying to drive us back up. Will we hang out at this equilibrium right now? Will we start to sell off? Will the bears get their claws back in again? Will the bulls get their horns in and drive us back up? We're kind of in that tug of war right now, which makes the market, listeners. So that means our vol friends, we're looking a little bit firmer earlier this morning. Still firm, but a little bit less so now. When we kicked off the show, VIX at about a 25.80, puts it up a little over 3, about 3.3 points from where it was on Thursday's show. VVIX back at a 90 handle, 90 even when we kicked off the show, up about 4 points. VXX, 19.5, that was pretty much unched. That's VXX, it kind of does whatever the hell it wants these days. UVXY back over a 10 handle, 10.30, up a full point from Thursday's show. SVIX, 12.40, down a full point from Thursday's show. UVIX, almost 10.5, about 10.45 when we kicked off the show, up about 1.2 points from Thursday. And VolQ, the NASDAQ vol, looking juicy again, back over a 30 and a quarter when we kicked off the show, up nearly 4 points, about 3 3/4 points from Thursday's show. All right, Mr. Meatball, the table has been set. First off, welcome to the program, Mr. Mark Sebastian from OptionPit.com. What are your enduring thoughts of the Superfly Jimmy Snuka? I should also point out an accused murderer. So he did not end his career in the most, shall we say, auspicious of fashions. He was pretty much about to be convicted of murder, I think, but he was, he had dementia or something. So that kind of, he ended up passing away, I think, before all that could go through. So obviously not the best of guys, but we're just talking about the wrestling side. And then B, Mr. Meatball, are you like me? Have you seen, I think you're in Texas now, so I think you're legally obligated to have seen Maverick. What are your thoughts on him if you have any? And then C, what's catching your eye in this topsy-turvy market, sir?
My wife and I were going to watch that this weekend, and we didn't get a chance to, so I still haven't seen it. Superfly Jimmy Snuka, I was going to say, I thought he murdered somebody.
He murdered like his girlfriend or something, and he ended up skating on the charges, and they came back to charge him like many years later when he was old and dying of dementia or something.
Yeah, well, I liked him as a wrestler, but doesn't sound like a great guy. What I'll say is that, we're not getting that big follow through. We got a real mixed bag today. Technology is down about 1%. You've got your mega caps, your Momo names down, Apple, your Teslas, your Microsofts, they're all down. But on the green side, you've got materials and mining and energy all blowing higher. Uranium names are all way up. I don't know exactly what the deal is with uranium, but it is moving much higher. I'm looking at UEC and CCJ. These names are up huge. CCJ up about 9%. Denison Mines up 13%. UEC, which is Uranium Energy Corp, up 12.5%. They're up big. And then we've got our Consolidated Energy blowing higher. XLE is having a really strong day. And we also see some strength in the utilities. That is not an awesome sign for the market. We are seeing, it's tried to rally back to flat, has been hanging around between down really 10-ish and down 30-ish most of the day, minus the last half hour. I'm very interested to see kind of what the close brings us. Are they going to come in and dump it or not? Just for the weekend, vol does look a little soft today. VIX futures are down, but obviously the VIX getting a little bit of weekend effect. Our good friend the VVIX is also down. The bond market, as Mike alluded to, is kind of working its way through the Fed. We're seeing a ton of volume in HYG the last few days. Just massive put buying. Has me wondering exactly what is going on. And then there's this massive VIX trade that just went up that I'll be interested in maybe bring up in the odd block.
Look at you giving some teasers out there, sir.
I'm a teaser.
I think we could probably make that happen when we get to odd block land, listeners. So maybe stay tuned for a little bit of that goodness. Speaking of uranium popping, that's good. Maybe I can finally get some of my Denison Mines covered calls off again. That'd be nice. It's kind of been languishing for a while. We shall see. Denison Mines popping up 13.7%. You're right, CCJ. I won't bury the lead. We'll get to all that good stuff in a little bit. First, let's go around the horn, see what's lighting things up from an overall markets perspective. And VIX, as you might expect on a day that started off firmly red and is now kind of whipsawing, those are two things that usually generate some VIX paper in a standalone session. If we had a whipsaw session or a hardcore red session, both of those things usually generate some VIX paper. Put them together, it's like two great tastes that taste great together, at least from a VIX volume perspective, because VIX is back on the board, 437,000 contracts on the tape today. That's beating the ADV, which is around 412. Remember I said that number below 400K on Friday's vol view seemed a little bit weird. The data was a little wonky on Friday. It seems like it is. It is back and working again. 412 for the ADV in VIX land. SPY already north of 5 million, 5.06 million. The ADV is looking robust again, north of 6.15 million. Yeah, I think we're going to get there by probably in the next hour. We're going to be past that in SPY. The S, same deal, 1.5 million contracts on the tape. The ADV, about 2.25 million right now. So the S also looking pretty robust. Small caps, 507,000 contracts on the tape right now for IWM. The ADV, 798. Small caps still down a full about 0.5% right now. So they've done a little bit of living today too. They sold off hard to start too. Then they rallied hard very quickly out of the gate. By 10:30, they were kind of at their high for the day. Then they sold off again. By 11 a.m., they were back down to pretty much their lows. And now they're rallying again. So small caps have already done a lot of living here by the start of the show. So interesting how the different indices are playing a little bit of different football out there today. And then we've got the Qs at about 1.9 million, the ADV about 2.35 million out there in Qs land. And you know what? It's one of these weird days, listeners. Everyone's kind of obsessed with the major indices. So we're not seeing Rock'em Sock'em Robots volume from a single name perspective. And that is, once again, bearing fruit today. Only cost you 188,000 contracts to break into the top 10 today. So much lighter than you might assume. But again, if you've been listening to this show for a while, you come to expect these kinds of things. Microsoft coming in at number 10 today. Let's see what the sordid saga of Microsoft is like today. They actually started off up today. They actually bucked the trend. They rallied out of the gate. And then they kind of sold off. Then they rallied again. Then they sold off again. Now I've done that about 3 or 4 times today. So they've also packed a lot of action into today already. Right now, they're off about 2 1/3 handles, or a little over 3/4, about 0.9% actually on the day. 265 3/4 is where they're hanging out. And then number 9, what Mr. Meatball was just talking about, uranium getting a bit of a boost. You know, that's that sector, unfortunately, back in the crosshairs for a variety of reasons out there today. Once again, we have people talking about issues that around a massive nuclear power plant. Never a good thing for the global situation, but a good scenario for all things uranium out there this past couple of sessions, including today. CCJ, which if you're listening to the Odd Block or Options Oddities for a while, Cameco, one of these frequent names. It is, of course, Cameco Corporation, uranium mine, and uranium mining company, I should say, out of Saskatchewan, Canada. Ticker symbol CCJ, 29 and about 12 or so right now, up about almost $2.50 or nearly 10% today. So a nice pop. They just kind of popped hard out of the gate out there today. We don't see our buddies Denison Mines in the top 10 because they just don't do enough options paper. It's a $1.50 stock, not even listeners today, but they came roaring out of the gate today as well, up to about 138, almost. Actually, did they hit 140? They threatened it. 138 was the high of the day. That's where they're hanging out right now. We'll see if they can get there. They've had a little trouble at that 1/2 level in the past. So we shall see if they can make it out there today. Then to number 8 out there. Always fun to see some new names popping into the top 10 today. This is an old friend. We haven't talked about this one in a while. This is a Pinduoduo. This is an ADR. They leverage technology to promote and enable the traditional agriculture industry. Easy for me to say. Their farmers supplied fruits and vegetables to 16 million farmers, I should say, supplied their fruits and vegetables to Pinduoduo users. So there you go. Online technology in the ag space. You don't see that too often. Ticker symbol PDD, like I said, 6720, up nearly 17% today, 16.75%, about $9.62. So this one's on the rampage. There has been some action out there in the ag markets right now as well. So a lot of that probably playing into what we're seeing here on Pinduoduo. 220,000 contracts on the tape today for PDD. So that's a hefty number for PDD. We talked about them before, but usually it's been in the odd block context, not so much in the top 10 most active context. Yes, that's where they find themselves today, right next to a frequent offender, which is AMD at number 7, 274,000 contracts. AMD a little bit shy of $89, off about 2.25 right now, or nearly 2.5%. Again, good for 274,000 contracts. Then our old friend, they were on last week. They're back again today after their earnings. It's 3M. You should know their ticker by now. It is just 3Ms. You know, I love a good appropriate ticker, listeners. 126 and about a half, off about $2.50 on the day today. They also kind of had a interesting saga today. Started off right around 129, a little bit close to that, and they sold off hard to 125 and about a quarter, and they bounced off that back up to 127 and a half, and now have given some of that back again down to 126 and a half. So another name that's done a lot of living already by the time we kicked off the show here today. Number 5, another frequent offender, it's NVIDIA, 416,000 contracts on the tape. They are 158.70 or so right now, off nearly $4, about $3.90, nearly 2.5% today. They shot up earlier to about 162, then have given up the ghost since then. Number 4, let's get memey, listeners. What do you think? Let's go back to Bed Bath & Beyond. 484,000 contracts on the tape for this one. This one also having a nice little day today. Starting off the day about $11.50. Right now, 13.75. So quite the rally here for Bed Bath & Beyond. How high did they get today? Got up to 14.13, looks like today. So a lot of living today, up nearly 30% yet again. Meme kids are back, and they're coming to play in Bed Bath & Beyond. Also in the options, obviously, nearly 500,000 contracts on the tape for Bed Bath & Beyond. Amazon, over 500,000, 510,000 contracts. Hanging out right around 130 right now, off about $0.00 It shot up over, looks like about 131.5 was the high today, and has since given that up. Got down to 128 and change this morning as well. So it's had quite a little bit of a range as well today. And then number 2, I said number 2, it's actually looking pretty robust today from a paper perspective. 952,000. That's quite a jump from 3 to 2, listeners. 3 is about 500,000. Number 2, 952,000. That gets us to Apple. Selling off today, off about $2 or about 1.2%, 161.60 or so. Looks like it got down to the 160 handle, listeners, this morning, and then just bounced hard off that, right back all the way up to 162.25. That's where it was a few minutes ago, and now it's starting to give that up again. So the market said 160 this far and no farther for Apple, and then it bounced hard off that one. This is one we talked about for a while. This one has been interestingly resilient. It sold off back in June to about 130. We were talking then about, can you get Apple below a triple-digit level? Will that happen again? The answer was no, listeners. They bid it all the way back up to within spitting distance of a 52-week high, right around 183, got up to 174.5. That was about 12 days ago or so, and now since has kind of trended lower a bit again. But man, they refuse to let Apple die. And let's see what's going on out here with the number 1. You know what it is, listeners. It's the old TSLA, just barely edging out Apple today. 952,000 contracts on the tape for this one. So nothing over 1 million today, but getting pretty close. So interesting. The bottom half of the top 10, not so active. Top half looking a little bit more robust. Tesla, again, these numbers, they always throw me for a loop. And I look at them, I'm not used to the split adjusted Tesla yet. 285.59, $2.50. We're just talking about 1,000 not too long ago, listeners. Now we have to adjust that in our rearview mirror. The new 52-week high split adjusted is 414.5. So 285.62, still a pale shadow of that, off a whopping $2.50 today. So a comparatively quiet day for Tesla, but still good from an options perspective. 959,000 contracts on the tape. What's lighting it up out there this week from an earnings vol perspective? Let's find out. Not much today. Tomorrow we've got Best Buy, Big Lots, and CHWY. CHWY themselves not making a lot of noise these days, but the former founder of CHWY making a lot of noise, of course, getting involved with GameStop and all the Bed Bath & Beyond and everything else these days. A lot of that is laid at his doorstep. We have HP on Tuesday as well. Wednesday, we got Vera Bradley and Five Below. So if the dollar store is a little bit too cheap for your blood, maybe you want to go $5. Five Below's got you covered on Wednesday. Thursday, what's up with the soup vol? I guess we'll find out. Campbell's Soup Company, Hormel Foods as well. So double hit of soup-related volatility on Thursday. Build-A-Bear Workshop. Oh, and everyone's favorite, Ollie's Bargain Outlets. I was not familiar with this name, but Brian has done it a few times now, I do believe, on OPR. He's had that be his trade of the week in Ollie's there. So Ollie's popping off on Thursday. I believe it's a Southern chain. Probably why I'm not familiar with it. Broadcom and Lululemon, they of sheer yoga pants infamy. Oh, you know what? Our old friend Pinduoduo was this morning before the bell. Let's see what they were up to that's causing all this ruckus out there. They were pricing in 12.2% listeners. They went into the announcement, by the way, about $57.50. They actually delivered over 20, actually exactly 20%. They're trading at the time he ran to $69.10. They have given some of that back now. They're $67 or so right now. Still dramatically outperforming their straddle. So however much volume we thought there was in online agriculture technology, the answer was not enough because there was more to come out there. So we got the brand new hot off the presses earning move results here for good old Pinduoduo. What's coming up a little bit later this week? We got Best Buy. There we go. Easy for me to say. Best Buy, August 30th before the bell, $74.15. 5 3/4 is what they're pricing in. The past they moved $4.91, so a little bit more juice in Best Buy. I haven't been in Best Buy for a while. I actually went to one recently, and I was kind of surprised at how barren the shelves seemed. You know, obviously, logistics is a challenge out there, but it's never a good sign when you have a big, expensive, big box retail store in a big, expensive downtown area like Chicago. Can't really put stuff on the shelves. It's never a good thing. Big Lots, the 30th before the bell, because people have been writing the obituary of Best Buy forever, and it manages to persist. The 30th before the bell, $22 even is where they were trading. They were pricing in $2.70. In the past, they moved about $1.70, so a whole dollar's worth of extra juice on a sub $3 straddle. That's a lot, listeners. That's a lot. CHWY, 30th after the bell, $38.10 is what they were trading at. $4.93 is what they were pricing for their straddle. They, in the past, have moved about 3 1/4. So substantially extra juice in CHWY as well. Let's go out to the premium dollar store category, aka Five Below. 31st after the bell, $127.14 is where they were trading. They were pricing in pretty much $10. And in the past, they've moved $7.75. So that's a heck of a lot more juice in Five Below as well. Wow. Interesting. Let's go out to Ollie's just to make Brian happy. Why not? Ollie's, the first before the bell, $61.13 is where they were trading. They were pricing in $5.52. In the past, they've moved about $6, so a little bit less juice for Ollie's. One more, Lululemon. I lied. September 1st after the bell, $311.31 is where they were trading. They were pricing in $22.11. In the past, they've moved $16.84. So wow, sheer yoga pants vol back in session. And by the way, listen, that will never let go of that. That one just cracked me up to no end. All right, let's go on out to the season now. How we're looking. And it looks like we're wrapping up the season here with pretty much all green on the screen. 122% is where we're wrapping up the season at. It seems like, wow, that is by far the most robust season we have seen since the start of the pandemic. I want to talk to Max. I know they've adjusted how they measure these. So that could also account for a little bit of this upsurge of green we're seeing right now. But still, the average since the onset of the pandemic is 86%. So 122 is fairly robust. So that means every week they've adjusted it again. Week 2 and week 1 were below 100%, like 98, 97% respectively. They have been adjusted again. Week 1 is now 115%. Week 2 is 110%. Week 3, 125. Week 4, the banger week, 141%. Week 5, 114%. Week 6, 115%. All that averaging out to a astonishing 122%. So buying vol was the way to go this cycle, listeners. No new earnings trades for you guys to chew on today, but there are 92 long straddles and 65 long calendars that we are monitoring for your trading enjoyment and education, listeners. Speaking of enjoyment and education, let's see if we can do a twofer in our next segment. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let us commence on the weird, the wild, the wondrous side of the show. Yes, it is time to unleash the eye of Sauron, see where it fixes its gaze today. And today's gaze is actually looking kind of familiar to what we just talked about on Options Oddities just a week or two ago. In fact, if you're not listening to Options Oddity listening, you should check it out. It's a fun show. On an episode a couple of weeks ago, we had one of our pro listeners. It was Mickey. It was Mickey, 1984 Army retired. He asked what the heck was going on with a huge block of calls in Callaway. Ticker symbol Eli was at the time 14,983 of the AUG expiring on the 26th. So in the weeklies last week, listeners, 24 calls. They sold them for 45 cents. We talked about them on the show, how we thought that was just a pretty aggressive near-term bit of some covered call premium on a name that had been pretty much beaten up. Well, spoiler alert, looks like that person might be back. Before we get to that, let's break down good old Callaway for all of you who haven't joined us on Options Oddities. Callaway, you know it, listeners. Callaway Golf, the Big Bertha, all those crazy clubs and everything. Trading right now 22 3/4, off about 5 3/4 on the year, about 20%. A year ago, it was trading $28.50. Got up to its high for the year in September. Looks like right around 31.70 or so, and hung out there for a little while. Hung out there till about November, and then they kind of started giving up the ghost. Got down to their low for the year, actually, back in May. So not quite in the June or July timeframe. We've seen most of our other names hit their low, but earlier in May, got down to 17.78. And since then, it has bounced about $5. It's at about 22.72 right now. Nice little rally, nice little resurgence here for Callaway Golf. As I mentioned, that person came in very aggressive because you don't see a lot of size weekly covered call writing. Typically, when we see large funds and institutions doing this, it's kind of more of a set it and forget it trade. They go out a few months, maybe 6 months or a year, lock in an income level they're happy with, and then they move on to the next trade. This person was trading more like a size retail trader, which was fun to see, dumping out nearly 15,000 of the 1 week to go 24 level calls, and they worked out, listeners. They ended up pocketing the stock close on expiration $22.75. They sold the 24 calls for 45 cents, nearly 15,000 times. So do the math. It worked out pretty good, about 675 grand in their pocket. So it seems like, Mr. Meatball, this person liked it so much, they're coming back to do it again. This time, a little bit different. They're not getting there was no earnings in the last one either. They just got a nice, I guess they were going a little bit closer to the fire, which is why they got that decent fill, because they're not getting that same fill this time. But the size, weirdly enough, is almost identical. This person is averse to doing a round 15,000 lot, apparently, because they did 14,983 last time. This time, 14,970. Maybe they think if I do below 15,000, no one will notice me. Surprise, we noticed you. All right, they came in nearly 15,000 of the SEP 24s going up. This time, Mr. Meatball, for 25 cents. Let's see, last time it was a 39 vol, and this time it's a 36 vol. They're going out farther, too. They're going out into the actual monthlies, not the weeklies. So they're going a longer time frame, getting less juice for it. I don't love it as much. Obviously, the stock is a little bit lower. That's counting for the lion's share of the lower premium levels here, because they're keeping to that same strike, that 24 strike. So I guess you can at least salute them for keeping their level the same. They haven't adjusted the level where they want to sell the stock. They're still at 24. Just when they did it last time, the stock was a few cents away from that. So clearly they're not playing with as much fire this time, but going out longer, getting less money for it. I don't love it as much, Mr. Meatball, but clearly they liked their last trade. They liked pocketing nearly 700 grand. And they would like to do it again in the home of the Big Bertha, Mr. Meatball. What say you?
Probably covered right against some long stock they hold. Looking to produce a little bit of yield. Like, what is that, 1% between now and September 16th? Not awful if Callaway's just going to sit here. So they're just looking to produce some income. I'm with you. Don't love the premium level, but I get the trade.
When's the last time we saw a big fund dump like 15,000 pretty much at the money weekly calls? It's not the trade we see that often.
No. This is someone with someone very specific. This could be a a large shareholder. I don't know the entire story, but they've got a plan and they're looking to produce some. CHWY doesn't pay a dividend, so I think they're just looking to pays a penny. I think they're just looking to create some income off of it.
Yeah, and obviously they've identified that level, listeners, 24. They don't mind dumping it, and they didn't really. I mean, selling a weekly call, you have to be pretty on it, and very near the money, or you have to be willing to let the stock go, or you have to be willing to roll it. And they didn't really have to last time, so we didn't see it. But I get the sense that they're not too shy about maybe letting some stock go. We shall see. I'd be curious what you guys thought. Obviously, you guys brought this first trade to our attention, so we love you folks when you guys spot some interesting, weird ones out there. Speaking of weird ones that we spotted, let's go back to pay a few off right now because it is a quiet single name day, not so much on the major index side. Let's go back to the August 18th show. Our catalog of August trades is just overflowing. We got to pay some of these off, listeners. We went back on the August 18th show. We profiled a one-day flyer in Kohl's Corp, ticker symbol KISS, KSS. Kohl's right now trading $28.50 off about 1.25 or about a little over 4%. On the year, they've had a rough year, off 50, almost 51%. A year ago, they were trading $57.80. They sold off to $44.89 in October, then rallied again in November up to about 62.5. Sold off again to in the 40s again in January, then shot up, looks like in earnings in January from 46 up to 60, about 60, their high for the year, 64.38. Bounced around that level for a while until they were still in the high 50s in late April. Then they started giving it up again. May 5th, they started selling off. By May 24th, they were down to $36. And then they tried to rally again in June 9th. They got up to $46.60. And then that was kind of about all they wrote for them. They sold off to their low for the year was $26.07. That was in mid-July. So they have rebounded a couple of bucks from there, but still far off their highs for the year. Looks like somebody back on August 18th, listeners, was taking, again, a lot of near-dated paper out here, which is interesting. A one-day flyer in Kohl's calls to the tune of 3,000 of the AUG 33 calls. They bought them for pretty much 50 cents, 49.8 cents. That usually means they did kind of a sweep. Listeners got a bunch of different prices, so they averaged them out to 49.8 cents. But that was through the offer. The offer was 48 cents, so clearly they couldn't get them all done at that posted market. It's one day to go, so the vol is meaningless, but if you are intrigued, there was 105 vol. This was immediately after the earnings in Kohl, so they were just kind of throwing those dice. The stock was 32.25. They were buying the 33 calls for about 50 cents, listeners. Obviously, they needed a nice pop. And alas, they did not get it, Mr. Meatball. The stock closed on expiration at $29.89. So when they scooped it, the stock was $32.26. They were hoping for a nice $0.50 pop, because these calls were all opening, and they did not get it. They did not close them out. They were still open at the end of the day. So, Mr. Meatball, they rolled them bones on an earnings play, one-day earnings play, and ended up not going their way. They dropped about $1.50 on a one-day flyer in Kohl's calls, sir. What say you?
I mean, this is why you don't do one-day trades in ahead of earnings. It's unfortunate, but earnings are so binary that if you get caught up trading them, the long term, it's not a winning. It doesn't win. You got to be right. You
do, especially when you have the clock's ticking like that. You got no room, no margin for error, listeners. And when it sells off, looks like how low did it get? Looks like about not quite $3, but about $2.50. Then you're not looking good if you're paying through the nose for some calls that are already out of the money with hours to go, listeners. Let's go out to another show, August 11th. You probably remember this one, listeners, because this one kind of resonated with myself. I think the Rock Lobster was on the show then. He kind of was intrigued by this one. We ended up talking about him again later that week on Options Oddities, because it was a name that kind of resonated with us. This is Pure Cycle Technologies, ticker symbol PCT. Remember we discussed them. They were a spinoff. I forgot if it was P&G. Some other large company spun them off, and they're looking to find ways to treat waste plastic, which is a great thing. We're all awash in plastics. I think we all selfishly wish this name was trading $1 bazillion right now, because maybe that would mean they were going a long way towards reducing our plastic problem. They're having a nice little day today, bucking the trend, up 7 cents, where a lot of the other rest of the market was off. Trading $9.15 right now. On the year, they've had an interesting year. A year ago, they were nearly $14, $13.95. They immediately, the next couple of days, popped to their high for the year on September 1st, $15.92, so almost $16. And that was about as good as it got for them. They kind of sold off hard. They got much lower, much earlier than the rest of the market. They hit their low on January 27th of $4.94. Then they actually kind of rallied after the invasion up to $10.05 again. So they caught a nice lift. Obviously, a lot was going on with petroleum and the price of plastic and everything else around that time, so probably gave them a bit of a bump. But then that wasn't very long-lived, though. They sold off again back to $6.31 in May 11th. Then they did try to rally them again, got up to $9.85 on May 23rd. Then they sold off again, very volatile plastic company, as you can tell, listeners, to $6.69 in July 13th. And they were hanging out at that level for a while until we profiled them on the show. They were in the middle of a big upswing. And they shot up. Remember, at the time, listeners, I'm getting ahead of myself. I don't profile what we talked about on the show as well. Back on August 11th, we profiled a 4,000 lot of the AUG 10 calls. Paper coming in and gobbling them up for 47.5 cents. So again, getting some splits, listeners. It was a 130 vol. The stock was 9.25 when they put these up. And this was going right into the earnings announcement. The earnings were coming up after the bell. And so it looks like someone was taking a pretty aggressive flyer. And it worked out initially. The stock popped nicely. And so we talked about it immediately the next day on Oddity. Said, hey, these things are looking good. The stock's trending north. It shot up after earnings to $10.73. And so we thought, hey, this person or people, they're going to take this off. The answer on that Oddity show was no. But we kept waiting. And we kept an eye on this one. And it looks like this person decided to come back and do the old trick of paring it down, taking half off. They took half off the following Tuesday, August 16th. They dumped 2,000 of them for 76 cents when the stock was still about $10.70. So the stock was looking pretty good. And they thought, we'll take half of it off now. We'll get some money. So they made about $57,000 on that half of their trade. And they thought they'd let the second half ride and maybe make some more money. And that was not a good move, unfortunately. This is the second time we've seen big trades. I think we profiled one on Oddities recently, too, when someone took part of it off, thought they were looking good, and then they kind of let the second half fly, and that one came back to bite them. That's the same case here as well. So they left the second half, the other 2,000 open, and the stock just took a dive after that. The stock ended up closing on expiration $8.89. The expiration wasn't that long after that. We're talking only a few days, listeners. And the stock just fell apart. So $8.89. So those calls, I should say, were still open. They went out worthless. So they lost money on the second leg. So they ended up net losing money on the trade. They lost $38,000 after being on track to make a decent amount of money. They made nearly $60,000 on the first half of the trade. Think they would be up, but net they ended up losing money because they didn't get while the getting was good. So alas, listeners, another example of good trades being turned into bad by not taking them off when the time was right. Mr. Meatball, what say you, sir? I mean, you can't always fault him. It was a decent approach. You're trying to take half of it off. Maybe you still think this thing has some legs, and unfortunately, it did not, sir. The legs were cut out from underneath it almost immediately.
Yeah, I mean, it's always a good strategy to be taking money off as you're making money. But when it really does go south on you, you want to salvage your profit. And that is what they did not do here, unfortunately. So I get it. I like the first approach, but you've got to take your money when you get the opportunity.
Yeah, we've seen that so many times, listeners, over the past year on the Odd Block. Great trades, home runs. They don't do it. At least this person took some of it off, so it's better than it would have been, obviously, if they had let it all ride. They would have lost a lot more. But still, yeah, it's a shame when we see this. As we keep on rolling, it's not a shame, though. It's the strategy block. So let's get to it.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, Mr. Uncle Mike, you know what time of the show it is. It is time for you to unleash options, wit, and or wisdom, or your 20-minute review of Top Gun Maverick. Your choice, sir. How about it?
I'll try all three. So my 20-minute review of Top Gun with Maverick, just kidding. I don't know if I can pull that off for 20 minutes. I don't remember it quite that well, but it was a great movie nonetheless. So that's what I really liked about it. Plus, I don't want to spoil it for the meatball. So with that being said, some wit and wisdom for today. A couple of things. Maybe you're in one of these two scenarios. Scenario 1, you have a stock, you like it, you think it's going to rebound a little bit, it's down in value, you really don't want to get rid of it, but you really don't see it coming up just a ton in the near time frame. Or let's say you're in cash and maybe you like a stock, but you just don't feel comfortable putting a full position on. So you take a half position, but then you're thinking, well, I don't think it's going to go up that much. Is it even worth my time? Well, if you are in either of those camps, allow me to present you with the 1-by-2 ratio spread. Now, the 1-by-2 ratio spread is typically done with either as a stock repair strategy or as a strategy with which you can create double leverage without any additional monetary risk. And I'll explain the upsides and the downsides of both of these. So let's just say that I am in cash right now. It's a little bit easier to explain this way. And I like XYZ stock. It's at $100 a share. And I have $10,000 in my account that I would allocate towards this trade. I would never recommend putting your whole account towards it, but let's just say that you have several $100,000 in your account and this $10,000 you want to put towards this stock. You don't quite feel comfortable putting all 10 grand towards this stock. Well, one thing with which you could do is you could actually put only 5 grand towards this stock. And instead of, but you know what, I totally screwed up my numbers. I'm going to start that one over. XYZ stock is $50 a share instead of $100 a share. So instead of buying 200 shares and making it so that you own $10,000 worth of that stock, you could just buy 100 shares of that stock and you then have $5,000 at risk. But Mike, I think the stock could go up about 10% during my time frame. I want to participate on that, but I don't want to put all my money on the table. How can I do that? Well, by buying half the shares, you can then buy a 50 call option. Let's make that 50 call option priced at $4 per contract. And by making it $4 per contract, there you go. There's your double leverage. However, you had to pay $400 to get that privilege of double leverage. And you have time decay on the table. I don't know if that's something with which you want. Well, that's where the ratio spread can come into play. You can sell not one, but 2 55 calls. And let's say you can get $2 per contract for each of them. By doing that, that'll give you a $400 credit, $200 for each call option. And the fact that you paid $4 for the 50 call, you can sell the 55 call for $2. And by selling 2 of them, that'll offset the cost of the 50 call. Now, you might think, well, doesn't that make me naked? Well, no, it does not make you naked, because one of those calls will be covered by the stock, so it's a covered call, and the other one will be covered by the 50 call itself, creating a call spread. So by doing that, you're combining a 1-by-2 ratio spread with the stock itself. Now, what does that do? Well, let's say the stock is at 50 or below at expiration. Well, if that's the case, the credit from the 55 calls offsets the debit from the 50 calls, and all the options expire worthless. So the option trading section of the trade does absolutely nothing if it's at 50 or below. And by doing that, you've taken on half the risk. So if the stock's at 50, you'd break even just like you normally would. Now, how does this work if the stock goes higher? We've covered what happens if the stock stays the same or goes down. What if it goes higher? Well, let's say the stock goes to $53 per share. You make $3 on the stock like you normally would. On the 50 call, you're actually losing $1 because you bought it for, it would be worth $3 at expiration. However, the 55 calls would give you a $4 credit, and that would expire worthless. So on the stock, you make $3, and on the combined option strategy, you make $3, thus making $6 instead of $3. You're creating double leverage. Now, the same effect happens at 55, and anything between 50 and 55, you have double leverage without paying anything extra for it. Now, where's the disadvantage come into play? Well, at expiration, the disadvantage is that if this stock is above 60, anything above 60, you'd have been better off just owning the stock, because the most you can make on this combined ratio spread stock trade is $10. And as things go higher, if you'd have just held the stock above 60, then you'd have been better off. But anything between 50 and 60, you're better off doing the spread. Just unfortunately, you never know where the stock's going to go. Now, the second disadvantage to this trade, it doesn't play out right away. You're only going to get these numbers at expiration. So if you're looking to put on a little bit of double leverage today and then have this 2-month ratio spread and get out of it tomorrow, highly likely that'll never work because of the fact of all the time decay that exists. So you'll also have to be patient and wait this one out till very close to expiration. Now, there's other ways with which you can adjust this on the fly. Let's say it goes down, maybe you buy back some of the short calls, or let's say it goes up right away, maybe sell a 1-by-1 call spread and just have like a covered call going out. There's ways with which you can do this. But ultimately, if you're looking to just create the vanilla double leverage as I described, plan on holding it till expiration. If you'd like more information on this trade, I will be tweeting out a YouTube video on this very shortly. Follow me on Twitter at Mike TOSAW to see a video on this in more detail.
There you go. Check him out at Mike TOSAW. As we go into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block, the portion of the show where we break down what the heck we're keeping an eye on till our next episode on Thursday. A lot to unpack here. Let me really quickly pay off some of our questions of the week from this past week. We asked you last week, in this period of uncertainty in the market, which options trades are you utilizing in your portfolio? Gave you 4 ranges of choices: short puts or put spreads, long calls or call spreads, ratio spreads or butterflies, and collars or risk reversals. And nearly 50%, 49% chose the short puts or put spreads, 22.4% long calls or call spreads, ratio spreads and flies 16.3%, and collars and risk reversals bringing up the rare 12.2%. This week's question, given the fact we're kind of in a bit of a tumult in the market, we're going back to the broad macro levels. The markets were rocked by Powell last week and are still down to start the week. Of course, that could change if you wait 2 minutes, listeners. Does this second leg of the inflation sell-off have legs, or will the bulls return with a vengeance? Quite simply, where will the S close at the end of Q3? Gave you 4 ranges. So higher, north of 4,300, where we were hanging out not too long ago. Around these levels, we're bouncing right now, somewhere between 4,000 and 4,299. Lower, so 3,700 to 3,999, so back below that mythical 4,000 level, which even the fact that we were selling off hard, we have Powell and a lot of central bankers saying we need to perhaps drive the economy into recession to fix inflation. They're not scared of it, at least. We're still north of 4,000 in the S&P, listeners. Given all that information, we're bouncing off of it today, or much lower, below 3,700. Interestingly enough, the second we posted this, right before showtime, listeners, all the early votes coming in were either much lower, below 3,700, or much higher, basically, north of 4,300. So it was the 2 polar extremes are getting all the early votes, which is interesting and also kind of shows just how polarizing this market is. Let's go around the horn. Mr. Meatball, what do you think our audience is voting for out here in these ranges? North of 4,300, 4,000 to 4,299, 3,700 to 3,999, or below 3,700. And then B, what are you keeping an eye on for the rest of the week, sir?
3,700 to 3,799 is where I think our audience is going. I really want to see how the day ends today. I think today is very important. I want to see what volatility does. I made an allusion to that huge VIX trade.
You're right. We got so busy. We didn't pay it. So pay it off now, sir. Go for it.
Yeah. Customer bought 100 and how many did they buy? 100 and they bought 151,500 of the October 20 puts tied up delta neutral on a 5 delta. So someone looking for a big VIX move down ahead between now and October. So interesting trade there. There's your payoff, folks. So giant VIX 20 puts in October being bought.
Do you like that? I mean, October's when we were talking about kind of that little bit of a bump to the term sheet. You like fading it there?
It's an interesting spot. It's an interesting spot. I'm looking at that. tune into Vol Views for a deeper dive, but I don't hate the trade. Let's just put it that way.
Look at you teasing the Friday show. Yes, listen.
I know.
Vol Views. Vol Views all about
but
this.
I do not dislike this trade. And, that would pair pretty well with, some longer dated puts in something like HYG or in some of the bond market. I think we got to watch what's happening with the market over the next day or two and what's going on with the bonds. Bonds are going to be leading the stock market for the next month. So watch those bonds, and that'll tell you what the stock market's going to do.
What do you think, listeners? 20 puts for 20 cents? You down for those? It's an intriguing one. These were done tied up, so a little bit different, but intriguing nonetheless. Mr. Uncle Mike, same question for you, sir. What do you think our audience is voting for in our question of the week? Are they fading this market? Are they loving it? And then what are you keeping an eye on for the rest of the week?
I think the audience is fading this market. And then where I am, I'm going to say between 4,000 and 42.99 rather. I'm going to go with, I think that I got to be bullish. I can't do anything non-bullish. It's just not in my nature. So I will count on the 4,000 mark and the 50-day moving average. That's what I will count on. Otherwise, I will have zero credibility in these polls going forward. So that's where I'm at. In terms of what I'm keeping an eye on, like I said, I want to see if we can hold the 4,000 mark. And I agree with Mark in terms of the bonds showing where the stocks are going to go, just because this is a unique year where bonds and stocks are both down. There is no flight to safety because of the fact that if we have rising interest rates, then that's not good for bonds either. So I think that's definitely something with which we need to keep an eye on as well.
All right, listeners, that music means we have come up against it. Right now in the early voting, listeners, remember, this is our question of the week. Get over there to @options. Make your voice heard. Maybe we'll pin it so you folks can get easier access to it. Listen on the podcast as well. Right now, the early voting lower. So below 4,000, 3,700 to 3,999 is winning with 42.1% of the vote, followed by higher. Like I said, again, polarizing market north of 4,300, 26.3%, and then a tie for third with about 16% each for around here. So 4,000 to 42.99 and below 3,700. What do you folks think? @options is the place to go to make your voice heard. We got to get on out of here, listeners. But before we go, Mr. Uncle Mike, if folks want to check out all that you got cooking, including your new video, where should they go? What should they do?
Follow me on Twitter @MikeTOSAW. If you want to get a hold of me, go to my website. If you're looking for a financial advisor who actually does ratio spreads at times, go to www.stcharleswealth.com.
And Mr. Meatball, if they want to see your thoughts on this put trade ahead of Vol Views or anything else, where should they go? What should they do, sir?
Yeah, I'll be writing this one up on my VIX Edge blog. Go to options.com and read the VIX Edge, read the pit report for great actionable trade ideas just about every day.
What up, our chat saying they like these OC20 puts? They might start gobbling some of those bad boys up. If you're listening in the chat, listeners, stay tuned. We'll be back in a little bit on the Crypto Rundown. Our guest is a newcomer, Tristan Frizza, the founder of Zeta Markets. Should be very interesting, breaking down the crazy world of crypto. And then back again tomorrow, of course, for your pro taste of a little bit of the old pro Q&A session. This week, our old friend, the last emperor from Fidelity, Mr. Constantine, joining us in the hot seat again. That should be fun. And then, of course, back again on Wednesday for the old Options Bootcamp, Options Playbook Radio. And then back again on Thursday, episode 2 of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.